Well, good afternoon, students, and welcome to the second section of Intermediate Accounting. We are going to cover a number of chapters in the textbook, starting with Chapter 8 this week, and just going straight on through till the end of the course, 8 chapters later. Want to emphasize to you that there are a number of quizzes during this course that you must take, and they are timed, so you should allocate a clear section of time for each of those tests. I've had the numerous requests to reopen tests after they've closed. I'd like to kind of limit that as much as possible to genuine emergencies, so please be careful of your time on those. I believe there are 3 major tests, 2 midterms and a final. Also, I want to keep you current on your homework, and to do that we are going to employ a number of methods. One of them is we're going to attempt to cover all of the homework in class, not actually do it, but to lay it out for you. Make sure that you're ready to go home and work on it. This semester also take note that we are conducting class for the entire 4-hour period. As per instructions of President Gare of the university here. We don't want to shortchange you, and we do want to give you your money's worth. So plan on getting to class on time, please, and plan on staying the entire time. We will take regular breaks, and if you so choose, we can accumulate the breaks at the end of the class and take them early. With a 4-hour class, you're entitled to 4 10-minute breaks, which is a total of 40 minutes, so we can allocate that as the class most desires. Well, this chapter 8 is on recognizing revenues and expenses. And the first learning goal is to understand the basic revenue recognition and measurement issues that we are facing in this chapter. And in the remaining goals, we will look at each of these in some detail. As you know, the intermediate course is not covering anything new to you entirely. You understand the issues of revenue recognition somewhat already, but here, as opposed to the introductory class, we're going to go into the issue at some depth and make reference to the generally accepted accounting practices as kept in the code of practices by the Financial Accounting Standards Board here in the U.S. We will also make occasional mention of the international financial recording standards that are govern the rest of the world outside the U.S., although I have it on good authority from a number of CPAs that this is not as important as the textbook lays claim to. However, it does appear on the CPA exam, and if you're looking toward taking that exam one day, you should have some familiarity with IFRS standards. Well, in a company, in recognizing revenues, when it transfers control of an asset, either for a good or a service to a customer, a company recognizes as revenue the amount it expects to be entitled to receive in exchange for the goods or the services. The company recognizes revenue as it satisfies each performance obligation. There are 5 steps in revenue recognition. Let's take a close look at these. Number 1, to identify the contract with a customer. Number 2, to identify the performance obligations in the contract. Number 3, to determine the transaction price. Number 4, to allocate the transaction price to the performance obligations. And number 5, to recognize revenue when or as it satisfies each performance obligation. So in other words, we'll recognize revenues as they are earned. Let's take a look at our second accounting goal for this chapter, and here we take a look at the first item. How do we identify a contract with a customer? A contract is an agreement between 2 or more parties that creates enforceable rights and obligations. A contract must meet the following 5 criteria. Number 1, all parties agree to the contract and commit to performing. Number 2, each party's rights are identifiable. Number 3, the payment terms are definitive. Number 4, the contract has commercial substance. And number 5, it is probable that the seller will collect the consideration to which it is entitled. If these 5 criteria are not met, then the entity recognizes revenue when either of the following pertains. Number 1, there is no remaining obligation to transfer goods or services, and substantially all of the consideration has been received by the entity and is non-refundable. Or the contract has been terminated and any consideration already received from the customer is non-refundable. Excuse me. When there are multiple contracts, combine individual contracts into a single contract to determine the timing and measurement of revenue if one of the following criteria is met. There are 3. Number 1, the contracts are negotiated as a package and have a single commercial objective. Number 2, the amount of consideration to be received by the seller related to the contract depends on the price or performance of another contract. Or number 3, the good or services promised in the separate contracts are part of the performance obligation. So we can then consider multiple contracts as a single contract. Identifying contracts was the first of our points. The second is identifying the performance obligations in the contracts. A performance obligation is either a promise to transfer a good or service or a bundle of goods or services that is distinct, or it is a promise to transfer a series of distinct goods or services that are substantially the same and have the same pattern of transfer to the customer. To be a distinct good or service, it must, 1, benefit the customer or its own or in conjunction with other assets that are made readily available to the customer, and 2, it must be separately identifiable from the other promises in the contract. As you can see, this is getting quite detailed in definition. Note that we're working our way through the 5 original items in recognizing when a contract is performed. The third learning objective then is explaining and determining the transaction price in recognizing revenue. And here we have a number of considerations in recognizing prices, and we will cover those in some detail in the textbook. I think in this outline you can certainly read the summary by Learning Goal as I am using here, or read through the chapter. Number 5 is demonstrate how allocating the transaction price to performance obligation when recognizing revenue. All right, and again, some detail is presented here. Learning objective number 6. Assess whether to recognize revenue when or as each performance obligation is satisfied. So we can do this as an ongoing activity or at a single time with the completion of the final obligation, essentially. Learning objective 7, describe the key concerns in accounting for long-term contracts. And there are 2 of these. 2 common methods are the percentage of completion and the completed contract. They are just exactly as they sound. We recognize revenues percentage-wise as we complete the contract. That's a long-term ongoing contract. And the second method is to recognize all the revenues at the completion of the contract. Learning objective number 8, explain and implement the percentage of completion method of recognizing revenues. And here we go through a number of steps to do just that. Learning objective number 9 is to explain and implement the completed contract method of revenue recognition, our second method, and again, in some detail, we cover that. Objective number 10 is to describe and demonstrate the accounting for special issues in revenue recognition, including right to return sales, consignment sales, principal agent sales, bill and hold arrangements, and channel stuffing. Each of these is a highly specialized type of activity. They are not as commonplace as the ordinary contracts, and so each demands its own special treatment. Again, a considerable amount of detail presented here. And final objective, number 11, the detail required disclosures related to revenue recognition. And here we'll go through the various bullet points on that. Related to contracts and customers, companies must disclose the following items: disaggregation of revenues, contract balances and charges, performance obligations, transaction prices allocated to any remaining performance obligations, and related to significant instruments and changes in judgment made, companies must disclose methods for, first of all, determining the transaction price, including estimating variable considerations, adjustments to the value of the money measured in non-cash consideration. Number 2, assessing constraints or variable considerations. Number 3, allocating the transaction price, including standalone setting prices and variable considerations. And finally, measuring obligations for returns, refunds, or any other and similar obligations. With contracts, this can get quite involved, but we do have the obligation to disclose why a contract might, in fact, wind up costing more. That's basically what this section is getting at when we talk about variable pricing. A good example would be remodeling a kitchen, where the homeowner requests additional features, and the contractor must be very clear in how those are priced into the final product, and they should be apprised to the customer along the way of what costs are going to be. This concludes our issue on revenue recognition. I would suggest taking a close look at the questions on page 411. We have 27 questions that deal with various terms and identities that are discussed in this chapter. Of course, the chapter is highly legal because it deals with contract law, or tort law as we call it in the law field. You'll find this chapter either wonderfully interesting if you like the law, or a little bit tedious if you don't. Nevertheless, this is the heart of much of business in America today, is making sure that the contracts are clearly made, clearly understood, and that we do our best to eliminate contract disputes. And as accountants, that we take a proper stance on recognizing when revenues are actually earned based on legitimate considerations and worthwhile measurements. That summarizes Chapter 8. The discussion questions we will deal with in class. The chapter problems are assigned for you and should be done by Sunday at the end of this week. And we'll see you again next week for Chapter 9. Thank you very much.